Last weekend, going into Monday, Bitcoin gave us hope. A violent rebound, shorts squeezed, 70,000 reclaimed. It felt like maybe, just maybe, the worst was over. Today, Bitcoin is back under pressure, hovering in the mid-60s. Realized losses just printed the largest single-day wipeout in crypto history. $3.2 billion. Not Terra, not FTX. This week, the Fear and Greed Index just hit a 5, the lowest reading ever. Not bearish, not cautious, extreme fear. And when fear gets this deep, something interesting happens. Half the market says this is capitulation, it's over. The other half says Standard Chartered just called $50,000. We're not done. So which is it? Are we witnessing the final flush before recovery? Or are we watching the slow unwind of a fragile rally? Today, we break it all down. The largest realized loss event in Bitcoin history, historic fear readings and what they've meant in the past, institutional outflows accelerating, a major bank calling for $50,000 BTC and 1,400 ETH, and why, somehow, Robinhood's CEO is still tremendously bullish. This isn't just about price, it's about psychology. And now, we're sitting at one of the most emotionally charged moments of the cycle. I'm SENB Hero, and welcome to the SENB Daily Brief. Let's get into it.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's look at the tape. Not the headlines, not the panic, just the tape. Bitcoin is hovering between $66,000 and $68,000, down roughly 2 to 3% on the day. Nothing catastrophic, but definitely heavy. On the 2-hour chart, price remains below the 50, 100, and 200 moving averages. That matters. Friday's bounce was aggressive. This week, it's stalled. Lower highs are forming, momentum is fading. Stochastic RSI rolled over from overbought. That's not bullish continuation, that's hesitation. Support sits around 65.5 to 66,000. If that breaks, we open the door toward 63, possibly 60, again. Resistance remains firm at 69 to 70,000. That zone is still supply. Ethereum, hovering around 1900, still below all major short-term averages. Failed to reclaim 2,000 decisively. If Bitcoin slips, ETH likely revisits 1,800 quickly. No strength there yet. XRP drifting around 135. Solana under 80. Both compressing, neither leading. This is defensive positioning, not risk-on behavior. Total crypto market cap now sits around 2.3 to 2.4 trillion. We're down roughly 22% year to date. That is not noise. That is structural damage. Now here's the headline. Fear and Greed Index, 8 out of 100. It printed as low as 5 earlier this week. That is the lowest reading in its history, lower than Terra, lower than 2020. That's not caution, that's emotional exhaustion. ETF flows, negative 400 million. Bitcoin down 273. Ethereum down 129. Institutional money is reducing exposure, not rotating, reducing. Liquidations over the past 24 hours, about 285 million. Not a wipeout day, but open interest remains elevated, which means the system is still fragile. Bitcoin dominance holding near 58%. Alts are not leading. Capital is defensive. This is what late-stage deleveraging looks like. So the real question becomes, is this structural breakdown, or is this capitulation forming a base? Because our first story today answers exactly that. Bitcoin just recorded the single largest realized loss event in history, $3.2 billion. I'll break it all down for you right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk about what just happened. Not the bounce, not the hope, the damage. On February 5th, 2026, Bitcoin recorded the largest single-day realized loss event in its history, $3.2 billion entity adjusted. That is larger than the Terra collapse in 2022, larger than FTX. Let that settle. $3.2 billion in confirmed losses in one day. Who felt it? Retail holders, leveraged traders running 5, 10, even 100 times leverage on Binance and Bybit, institutional desks tied to ETF flows, and yes, miners. We saw transfers from Marathon. We saw pressure from large wallets. This was not isolated. This was systemic stress. At the peak of the panic, daily net realized losses exceeded 1.5 billion. 44% of Bitcoin's circulating supply is now underwater, almost half the market, holding coins worth less than they paid. That is what forced selling looks like. And when did this peak? Thursday, February 5th, right as Bitcoin was testing sub 60,000. That wasn't random. That was leverage snapping. Where did it unfold? Global exchanges. Binance and Coinbase pushed over $50 billion in 24-hour volume. Asia sessions amplified the downside. South Korea's high-leverage trading culture accelerated liquidations. Then, U.S. hours layered in macro panic, tech earnings weakness, Microsoft, AMD, tariff rhetoric, Federal Reserve hawkishness. Liquidity was thin. The order books could not absorb the pressure, so price cascaded. This wasn't slow bleeding. It was an avalanche. Over-leverage met macro stress, and the weak hands were forced out. Now, here's the important question. Was this destruction, or was this capitulation? Because historically, the largest realized loss events tend to mark exhaustion points, not beginnings. But, and this matters, capitulation only becomes a bottom if selling pressure dries up. ETF inflows must stabilize. Macro must ease. If that happens, 80,000 becomes a short squeeze target. If it doesn't, we revisit 60, possibly below. This was pain, historic pain. But markets don't bottom on comfort. They bottom on disgust. And we are very close to that line. All right, let's take a quick break. When we come back, we're talking about something even more extreme. The Fear and Greed Index just printed the lowest reading in its history. Stay with me.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, now let's talk about something more powerful than price. Sentiment. The Crypto Fear and Greed Index just printed 5 out of 100. Not low, not bearish, the lowest reading in its recorded history. For context, this index aggregates volatility, volume, social media sentiment, momentum, and dominance metrics. It pulls from global exchanges, platforms like CoinMarketCap and CoinGecko, sentiment tracking firms like Santiment and Lunar Crush. It's not a poll, it's behavioral data. And right now, behavior says panic. The plunge accelerated between February 5th and 7th, right alongside the Bitcoin rout, as the market cap fell toward $2.3 trillion, down 22% year to date. Retail was selling, institutions were reducing exposure. Social feeds flipped from buy the dip to crypto winter. And when fear reaches 5, that's emotional exhaustion. That's FOMO completely gone. That's nobody wanting to stick their neck out. Here's the paradox. Historically, extreme fear tends to mark bottoms, not because fear is bullish, but because there's simply no one left to panic. But context matters. This fear isn't isolated. It's layered. Tech weakness, tariff rhetoric, Fed hawkishness, mining stress, liquidations, ETF outflows, fear stacked on fear. So yes, if Bitcoin reclaims 70,000 convincingly, if macro stabilizes, if ETF inflows return, this index could climb from single digits to neutral territory very quickly. Fear flips fast. But if 60,000 gets retested, if macro pressure intensifies, fear can stay pinned, and prolonged fear erodes confidence. Right now, the market isn't euphoric. It isn't hopeful. It isn't even angry. It's tired. And that's often where turning points hide. All right, quick break. When it come back, a major bank just slashed its 2026 Bitcoin target to $50,000. And the reaction might surprise you. I'll reveal the who and the what right after a word from our sponsor.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at wholeshotcoffee.com.
And we're back. So, now we bring in the suits. Standard Chartered just dropped a bearish bombshell, and markets listened. The London-based bank cut its short-term Bitcoin forecast to $50,000, down from a prior $100,000 projection. Ethereum, $1,400, down from over $3,000. That is not a minor adjustment. That's a structural downgrade. The call came from their digital asset research team led by Jeff Kendrick. The timing, February 6th and 7th, right as Bitcoin was testing its lows, right as realized losses hit records, right as fear printed a 5. The reasoning? ETF outflows, macro repricing, hawkish Fed signals, tariff risks, and what they describe as exhausted rally demand. In plain English, liquidity is tight and buyers are hesitant. They're not calling for collapse. They're calling for further capitulation, a flush to 50,000 before a second quarter recovery. That's the thesis. Pain first, relief later. Now here's where it gets interesting. Market reactions to bearish bank calls tend to fall into two categories. Either it accelerates fear, or it marks exhaustion. Because when major institutions publicly slash targets, often the damage has already been done. Could Bitcoin see 50,000? Absolutely. If macro deteriorates, if tariffs escalate, if the Fed tightens further, if ETF outflows persist, those conditions make that path plausible. But if inflows resume, if liquidity stabilizes, if risk assets regain footing, then this downgrade becomes a contrarian signal and price invalidates it quickly. Right now, we're in the middle. Not euphoria, not collapse, just uncertainty. And uncertainty is where volatility lives. All right, quick break. When we come back, while most of the market bled, one token quietly surged over 70%, and it wasn't hype, it was structure. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back. So, when fear hits extremes, markets don't just fall, they rotate. While Bitcoin wrestles with realized losses and macro pressure, search data and on-chain activity are highlighting a different conversation. BlockDAG, Zcash, Solana, Uniswap, not as moonshots, as watchlist resilience. Let's break down the who. Analysts from CoinMarketCap, CoinDeco, and CryptoSlate began publishing February watchlists midweek. Jake Simmons and others pointed to these names specifically. On X, influencers amplified the narrative. In a bear market, utility survives. Now the what. BlockDAG has its mainnet and token generation event live. Infrastructure stories attract attention during downturns because they represent building, not speculation. Zcash is seeing renewed interest tied to privacy demand. When regulatory pressure increases, privacy protocols resurface in the conversation. That's historical behavior. Solana continues to trend for speed and ecosystem utility. Despite price compression, activity remains. Memes, DeFi, NFTs, infrastructure, usage didn't evaporate. And Uniswap? Still the liquidity engine of decentralized finance. When centralized platforms wobble, DEX volume becomes part of the resilience story. Now the why. Bear markets punish narrative tokens. They test actual utility. BlockDAG's scalability model, Zcash's privacy layer, Solana's throughput, Uniswap's liquidity dominance. These are functional value propositions. This doesn't mean they moon tomorrow. It means capital is quietly watching durability. And that's a different signal than hype. Where does this go? If adoption metrics grow, TVL, active addresses, real usage, some of these could outperform into Q2. But if macro pressure deepens, even resilient assets feel gravity. All right, one more story before we move on. Because even with extreme fear, one major CEO just said he's tremendously bullish. Let's talk about that next.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
And finally, while fear dominates timelines, one major CEO stepped into the storm and said the opposite. Robinhood CEO Vlad Tenev went on Bloomberg between February 6th and 8th, right in the middle of the rout, and said he remains tremendously bullish on crypto long term. Let's unpack it. Vlad Tenev, CEO of Robinhood, a company deeply tied to retail flows, San Francisco headquarters, interviews broadcast from New York, amplified globally across X within minutes. Despite Q4 profits dipping, despite crypto prices falling, Tenev doubled down. He pointed to infrastructure growth, wallet expansion, layer 2 integrations, user adoption metrics continuing to build quietly under price weakness. He did not say price is going up tomorrow. He said the foundation is still expanding. That's a very different statement. Historically, executives only double down during downturns if they see back-end growth, user wallet, engagement, transaction infrastructure, adoption curves that don't show up on a red candle. This is classic contrarian positioning. Buy when there's blood in the streets, build when sentiment collapses. But here's the balance. If macro conditions worsen, if risk assets continue to bleed, even the strongest infrastructure story doesn't protect stock price or token price in the short term. So this isn't a moon signal, it's a confidence signal. And confidence in extreme fear environments is data. All right, that wraps the headlines. Now let's shift gears, because the market may be chaotic, but your questions are sharper than ever. Time for the Proof of Thought mailbag when we come back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time for the Proof of Thought mailbag, where your questions are sharper than the liquidation wick from last Thursday. Let's go. Question number 1. Sen, is this the bottom? Of course it's the bottom. Until it's not. Here's how bottoms work in crypto. Nobody believes it's the bottom until 3 weeks later when everyone says, obviously that was the bottom. If fear and greed is at 5, if influencers are posting crypto is dead for the 47th time, if your cousin who bought Doge in 2021 just texted you, I'm done, you are near something important. But bottoms are processes, not events. Okay, question number 2 asks, should I sell now and buy back lower? Yes, the legendary sell low, buy lower strategy. A classic. Step 1, sell into fear. Step 2, price rips 12% overnight. Step 3, re-enter higher. Step 4, blame market manipulation. Timing capitulation requires precision, and most traders don't have precision. They have adrenaline. This next one is from @Who'sYourCryptoDaddy and asks, wait, this guy again? You just can't get enough of me, can you? Okay, he asks, is this crypto winter? Crypto winter is when nobody is arguing about price, when there are no thumbnails, no outrage, no cope threads, just silence. We still have outrage. We still have doom predictions. We still have bank targets getting slashed on a weekly basis. This is not winter. This is a deleveraging tantrum. This next one reads, Sen, I bought the top again. You didn't buy the top. You bought euphoria. And euphoria always looks like inevitability. Every cycle teaches the same lesson. Don't confuse momentum with permanence. Okay, last one for today is from, @Tina Bean. Hi, Tina. She asks, what are you doing personally? I don't believe in inter-office dating. But if you mean the crypto market, then watching liquidity, watching sentiment, watching ETF flows, watching leverage. When the market is loud, the smart money gets quiet. Remember, extreme fear doesn't feel like opportunity. It feels like regret. That's why most people miss it. Also, if you're still here, still watching, still thinking, congratulations. You're not weak hands. You're just battle tested. All right, that's enough spice for one segment. Let's zoom out, because price is temporary, cycles are predictable, and discipline is undefeated. Final thoughts when we come back.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, let's breathe for a second. Markets don't end in fear. They cycle through it. And right now, we are in the messy middle of a reset. Bitcoin at 66 to 68. Fear and greed in single digits. Banks cutting targets. Headlines screaming capitulation. If you've been in crypto longer than 5 minutes, you've seen this movie before. The names change, the narratives change, the charts redraw themselves, but the emotional pattern, exactly the same. Extreme fear feels permanent. It feels like something broke. It feels like you made a mistake. But historically, extreme fear is where long-term positioning happens quietly, not loudly. Remember something important. 44% of supply underwater, that means 56% is still in profit. The network didn't shut down, blocks are still being mined, developers are still building. Adoption didn't disappear because sentiment dipped. And if crypto were truly dead, it wouldn't need this many headlines declaring it so. Deleveraging cleans the slate. Weak hands exit. Excess leverage burns off. Liquidity resets. That is not collapse. That is compression. And compression precedes expansion. If you're feeling uneasy, that's normal. If you're questioning your thesis, that's healthy. If you're still here paying attention, that's resilience. The market does not reward comfort. It rewards patience. And patience only exists when things feel uncertain. So hydrate, touch grass, lift something heavy, ride something loud, zoom out. We are not in the end. We are in the recalibration. And recalibration builds the next leg. All right, that's today's Daily Brief. Stay disciplined, stay curious, and remember, noise is temporary. Signal survives. I'll see you in the next show. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.